In this session, let's understand about debentures. Debentures are basically loans which are raised by the company. It can be raised from public, it can be raised from closely held group, and this is one of the popular method adopted by the companies to raise long-term funds. So this is basically a long-term fund. Of course, sometimes you will see like 3 years debentures at all, but basically or generally they are long-term funds. Let us look at the characteristics of debentures. Number 1, debentures is part of borrowed fund capital. It means it is a liability, it is not an equity. So the holders of debenture holders, they are basically creditors to the company. If you look at the denominations of debentures, they'll be generally in the range of rupees 100, and it may even go up to rupees 1000, and the rate of interest will also vary depending upon the tenor, depending upon the security, and sometimes depending upon the purpose for which it is raised. Okay, and this debenture is basically a certificate of debt, and this certificate will mention when this debenture will be redeemed, what amount will be repaid at the time of redemption, and this certificate will carry the company seal, and the certificate is also called as debenture deed. If you look at the maturity period of debentures, they generally range from 3 to 10 years, and if a project is having a higher gestation period, it may also increase further. And debenture holders are basically creditors, so they do not get any voting rights because debentures are not instruments of equity. There are some more characteristics. The debentures can be issued either as secured debentures or unsecured debentures. Secured debenture means some asset will be charged as security for the debenture, and unsecured means it is clean. And debentures can also be listed in stock exchange, or it can be raised without listing in stock exchange as well. That's why we say it may be or may not be listed in the stock exchange. And if you look at the rate of interest of debenture, when a debenture is issued, this rate will be fixed and it will be paid every financial year. It may be quarterly, half-yearly, annual. It depends upon the terms, but the rate will be fixed, and that is going to result in a fixed cost for the issuer and fixed income for the holders. And these interest payable, whatever they're going to pay against these debentures, it's actually a charge against profits because it is an expense, right? So it will be written in the expense side of the profit and loss statement, and that will also help the company because that expense will reduce the taxes as well. Okay, so the interest payable is a charge against the profits, and very critical point of this is when we say charge, when we say expense, this has to be paid even when there is a loss. So if a company is making a loss, they cannot take shelter of it. They cannot take advantage of it saying that we are suffering loss, we cannot pay interest. No, it has to be paid. And when you raise funds through debentures, the cost of capital will be comparatively considered as low. When I say comparatively, if you are comparing the cost of debenture with the cost of equity, comparatively it will be lesser. Why it is lesser? Because the interest that is payable on debenture is considered as an expense. It can be charged and it will reduce the profits, and as a consequence it will reduce the taxes as well. So when you pay interest, let's say you are paying interest of 100 crore, and if you are in 30% tax bracket, then you are actually going to save 100 crore into 30%. You are going to save 30 crore in the form of taxes. So your net interest cost will be considered as 100 minus 30, 70 crore only. So only this 70 crore have to be compared with the debenture that is raised in order to arrive at the cost of capital, and because of that reason the cost of capital will be comparatively lesser. And with regard to redemption, companies can either repay the debenture if it is issued in that form, that is, if it is issued with a condition that it will be redeemed. So they can either repay the debenture, or if the debenture is issued as convertible debenture, then they can also convert those debentures into shares or say some other debentures. So that kind of flexibility is also possible in case of debentures, and debentures are easily transferable as well.
Are you a bank executive looking to advance your career in credit or advance profile in SME and corporate banking? Do you want to learn the pre-sanctioned credit and financial analysis skills that are essential for success in this field? If so, then our course, Credit and Financial Analysis Mastery Bundle, for bankers, is for you. In this comprehensive and structured online course, you'll learn the pre-sanctioned credit underwriting process, covering credit analysis and financial analysis specific to SME and corporate banking credit. You'll be guided through each and every step of the process, from understanding the basics of credit analysis to assessing term loans as a banker. With 15 modules and a variety of ebooks and other resources, you'll have everything you need to master this highly sought-after skill. Our course is pre-recorded, so you can access it any time, at your own pace, without disturbing your official working hours. Plus, you can access it as many times as you'd like and even download it to your mobile device for offline viewing. When you complete the course, you'll receive a certificate of completion. And with lifetime Q&A support through our Telegram group, you'll have access to the guidance and support you need to succeed. Don't miss this opportunity to advance your career in credit and financial analysis. Enroll in our course today and take the first step towards a successful banking career.